Will silver outperform gold? I'll explain why it could. Hi YouTube, how are you doing? And welcome back to yet another video. So today we're going to talk about why silver could outperform gold, or why it could be a better option from gold in 2024. Now, I know I've mentioned this in a couple videos about the silver unboxing, and I'm waiting for that package to get here. JM Bullion just sent the package today as just a quick update on this whole thing. So I'm hoping, well, I don't expect it to get here by this week. I expect it to be here sometime early next week at the latest. So be ready for that. We're going to do a silver unboxing. But for now, I want to talk about why silver could outperform gold. Or maybe a better way of saying it is silver a better option than gold? I think that might be the better way to go about this, because I've personally identified that there's 4 reasons why silver could be a better option than gold. So one that's kind of has a 2-in-1 package deal here. This is the first point, is that I'm gonna also make a case for gold for a second here, but gold and silver both have that safe haven appeal. So anytime that there's any economic uncertainty, gold and silver are seen as safe investments. Well, now the only thing that's different between the two is silver has an element, no pun intended, has an element of an industrial use attached to it. So there's kind of a secondary reason why silver is ever to be considered as an investment. And as you guys probably already know, silver is used for things like electronics, solar panels, batteries, medical equipment, things of that nature. So there is an industrial demand that provides additional support for silver prices to rise, especially with trends that like the shift into the renewable energy or green tech. So the second point that I want to bring up is the price volatility of silver. Now, silver tends to be more dramatic than gold. So, and any big market changes can definitely make the price change of silver be more noticeable than gold. Gold has always been that kind of that stable safe haven asset, where silver has that safe haven but industrial kind of volatility mixed to it. So if we look at the graph here, I have the graph of silver. As you can see, over the last, let's say, 30 some years, it's really been all over the place. It's been as low as below $5 back in the early 2000s and 90s, as high as almost $50 in 2011. And it's been jumping quite a bit back and forth between, these sporadic prices. I mean, we were as low as $14 in 2020 due to different reasons, but then it went up to almost, now we're sitting about 30. So silver is way more volatile. And if you compare it to gold, gold is a more steady, gradual uptick. It does have the peaks and valleys and dips, and has some volatility to it as well, because they do move with each other. But gold is definitely not as erratic as silver. So the price volatility is definitely something you can consider, especially if you're an investor who's looking to maybe make a quick couple bucks here and there. Silver is definitely something that you could take advantage of if you're trying to time the markets. All right, so then the third point that I want to bring up is the gold to silver ratio. Now, it has been sitting at around 80 over the last few years. And if you compare it to just on this graph alone in the last 30 years, anytime it's gone to 80, it has almost kind of fallen back down to around 50-ish. So if you look, like, if we just kind of just follow the graph here, it goes to 80, kind of drops back down again, comes back close to 80, and then it just drops down to 40, rises slowly over time back to 80, drops back down to around 50, and then it kind of stays around that point. But every time it gets to around 80, you can see that it does do a pretty good dip sometimes. But if you look over the last, let's say, since, I don't know, maybe around 2016 to 2018, it's been sitting at about 80. So silver investors over the last, 20, 30 years probably have not really seen much appreciation. I mean, it did hit close to the $50, I think, in the 80s, and it came close again in 2011. But for the most part, silver has kind of disappointed a lot of investors and stackers, especially when it comes to price increases as compared to gold. But one thing I want to talk about specifically with this ratio is that we've been sitting at above 80 and for quite some time versus these random little short peaks of maybe a couple months and then it falling back down again. We've been sitting at about just above 80 now for the last 3, arguably 6 something years. So one thing to consider if you're trying to if you're bullish for silver, you're expecting this ratio to drop back maybe down to 50 again. I mean, if we can get it down to 35, that'd be fantastic, because everyone who's been stacking at above 80 on this ratio is going to cash in on gold at a very good return. So what does that look like? Well, let's say you had bought let's say you had bought silver at the highest ratio at 120. And basically all that means is it takes 120 ounces of silver to get 1 ounce of gold. So if you bought 120 ounces of silver, hypothetically, let's go backwards in time here. Let's say it mirrors this graph here and it drops down to 33 again. Or let's just call it 40 to make it easier. Then you could turn in all 120 ounces of silver for 3 ounces of gold. So you made 3 ounces of gold. So trading the ratio could actually benefit you, given the fact that silver has been sitting consistently at around 80 or higher over the last, let's call it 5 years or so. If that ratio goes back down, and all the cases that I made earlier that could put silver in a higher price, because if silver goes into a higher price, it's going to drop this ratio in a manner going in this direction, which makes silver more expensive and makes gold cheaper. So right now, sitting at above 80, silver is a great buy. I mean, at $28.44 at the time of this video, I think most people can skip a steak dinner out somewhere and buy an ounce of silver instead. So if you're bullish about silver, the fact that it's sitting at this high or of a ratio, or in other words, it's been so cheap for so long, if there's ever a bull market on silver, then you have the opportunity to trade the metals and gain more. Because let's say you do buy it at 40 and you exchange the 120 for 3 ounces of gold, and let's say it goes back up to 120 again, like we're just going to reverse it here, then you could take those 3 ounces of gold and trade it in for 360 ounces of silver if you wanted to do another swap return. So trading the metals won't make you, quote, richer. It just stacks more metals, which I guess in theory could get you more money as well. But trading the ratio is something to consider, because over the last over the last 5 years, it's been sitting at about 80 and it hasn't really dropped, with the exception of what happened in 2020. Of course, we all know that. But otherwise, it did have a short dip into the 70s a couple months ago, but it's been sitting at above 80 for quite some time. And like I mentioned earlier, if everyone's kind of fallen asleep and given up on it, and the fact that it's sitting at where it's at right now for as long as it's been sitting at, if it does go in a bullish direction, everyone who's been stacking, like I said, over the last 5 years is really going to have a good return if they want to trade the ratio in the future. And the final and probably the most important point is why silver is probably better than gold is just that it's more affordable. I mean, it takes right now almost, I think, what was the ratio we saw earlier? It was sitting at about 88 ounces to buy 1 ounce of gold. So I think, around $30 to buy 1 ounce of silver, it's way more affordable for someone to get into stacking or into investing, because while there are fractionals of gold, the premium on those can be really, really high, and that might be a video for another time. So getting silver at just $30 an ounce, around that, at least right now, I think most people can do it. Like I said, give up the steak dinner for a night and buy an ounce of silver instead. So the affordability factor, I think, is probably the biggest advantage that silver has over gold, because if gold and silver are going to become more expensive, I think gold is going to become more out of reach for the everyday person, and silver, at least for right now, is going to be I mean, who knows? The window could close in on it, and silver could skyrocket up to 50 to 100. Or I mean, who knows? Who knows what it's going to do? But let's assume that it gets higher in price, then it might become more out of reach for more people. So the affordability factor is definitely the biggest advantage that silver will probably ever have when it comes to comparing itself to gold. And regardless of which metal you're looking at, I mean, as of right now, $28 could look like a great deal in 2 years. I mean, even gold right now at $2,500 could look like a great deal in 2 years or 5 years. So something to consider. All right, guys. Well, that's going to do it. So let me know what you think. Are you going to be adding more silver into your portfolio this year? Let me know in the comments section down below. If you found this video helpful, please don't forget to give it a thumbs up and subscribe. And I will see you guys in the next one. Bye-bye, guys.